Hey, hi, good morning, and this is Parthiban. Hi, this is Parthiban, and today I'm going to explain to you guys under the TRIPE module how contrarian trading model can be applied on forex, stock market, options trading, any instrument that humans trading. This psychology is really exists, and a lot of traders, novice traders, I would say those who are lack of experience will be fall for this trap. Now, what I mean by that, now up to this point, okay, if you guys see from here, a lot of buyers have bought. You can see the price is moving higher, 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 and there's some kind of profit taking is taking place here. So this is a sign where it's taking a profit taking, and a bullish sign is hit to this level. Now when the price drop, and this is the area where the support, which is this one, sorry, resistance, become support. So a lot of novice traders who have learned this, that the market is like balanced and everything, they would be expecting the market to go rally up all the way up, even higher, because there's a sign of bullish candle. Now what I did was, if you see the trade, I went short here. My sell, my stop loss was over here. I think you can see that there's a dot here. And the price moved impulsively down. Those who bought here, who are naive new traders, will be panicked. They'll be closing the trade as it goes down. And what I did was I exceed my profit there, and price was hovering. Now, if I want to buy, I want the price to come even lower to this level, because a lot of novice traders have placed their stop loss just below this swing low. So when they are panicking, I will be becoming greedy and buy more. And when they become greedy, I'll be fearful. It is what Warren Buffett's quote. Now, what is this concept? Now, in real life, if you see that there'll be a sale in a supermarket saying that a Nike shoe which is sold at 300 ringgit will be sold at 150 ringgit, 50% discount. A lot of people will be rushing in. A lot of uh, crowd will be at that area. Now, but in currency trading or stock market or other instrument trading, what's funny is when the price gets cheaper, you're buying $1 worth of goods at $50, 50 cents. So it's actually a very good deal, but people will be panic and sell off because they feel that as it goes down, it's going to continuously go down. As it goes up, it's continually goes up. So this is not something that you read and learn. This is a psychology which a real money at stake. People cannot see losses. Naturally, human beings, risk, they are not risk tolerance, or they don't like risk. So when they place an order or place a trade, bought the stocks, they expect immediately there's a rise. But this is the nature, the dynamic of this currency trading, where it's not that you can time the market all the time, which is no one. Those who are experienced traders, they know they cannot time the market. But what we know, average, when the price goes lower and lower, it's a good price, good bargain. Then you buy more, and if $1 goods available at 60 cents, you buy 10 unit, and if it's available at 50 cents, you buy 5 unit. If it's available at 30 cents, you buy 10 unit, because it's getting cheaper and cheaper, and it's a good price for you to accumulate. Now, what happens in the market? A lot of people panic, and they profit from the panic. That is the game over here. Now, what I did was I exceed my trade, and I enter my trade over here. I entered my trade over here, and price goes higher. I was just stay calm because I was having many other positions. So I was just allow the price to really drop. When everyone fearful, I exit my trade over here. So this is one example how contrarian thinking model will be very helpful for you guys in the trading world. Now, this is one of the quite advanced, advanced, evolved traders trading style. A lot of traders will be looking for confirmation. We don't look for confirmation. We Our exit point is confirmation for the traders. So when we must enter before the confirmation created, then only you get a very good risk reward trade or very good entries. Okay, now if you see, I'm going to show you another example which I traded. Now look at this another trade. Okay, New Zealand dollar. Okay, never Australian dollar, which I took a trade. Now this is the trade which, okay, let's okay, wait, hold on, yeah. Now if you see Australia and USD, this is one of the amazing trade setup which I took. If you see up to this point, let me mark up to this point. Okay, let's mark before, before and after. Now we see before, what market have done is it's a very clear downtrend sign that it form a low, high, low, and it formed a couple of highs, and then it created new low, low. Anyone who are novice traders will say this is very clear downtrend. Now, when the clear downtrend is set up, where is the trap is being established? I'm going to show you where once there's a very clear sign of sellers sign, what novice traders will be doing is they look for a level where support become resistance. Now, I want to mark support first with the green color, where this is support, where this is support. In fact, this is support, couple of supports here. Now the entire support will become resistance, and where they will place their stop loss. So those who okay, let me switch the thing first. Okay, so since support is here, this is the area where they go to sell. Since the support is here, this is the area where they go to sell. This is the area where they're going to sell. This is the area they're going to sell. Now where is their stop loss? Their stop loss will be exactly those who sell at this level. Their stop loss will be here. Their stop loss will be here. Stop loss will be here. Stop loss will be here. Now what market have done? You see, what the novice traders will be thinking, every time the market comes to here, they expect the price to drop. And if you see, the market have shown some kind of sign that it's like a dropping, and then they hunt their stop loss. And a lot of people waited here and they start selling. In fact, there was a selling sign, and the price all the way went up to this level, where even some traders would have moved their stop loss slightly higher, so that is giving them hope that it's going to drop. So those who sold here, sold here, sold here, sold here, sold here, in fact move their stop loss top up, this market movement giving them hope. Now this rally will freak them out. All of them will exit their trade because they feel like it's already uptrend. Now that is the place where I am going in to sell, because this is a bullish sign. I'm selling all the way down to this. Now this is the contrarian thinking model, when everyone is start buying. When what's happening over here is they went and sell at a very bottom price. If you see over here, this is very low price. Now as the price go higher, they get panic, they close the trade. Another group of people, when they think this is uptrend, they will be start buying here. So when they start buying, they lose a sense of risk management, where they are buying at a very high price because they are so consumed by the candle formation patterns and indicator that shows so much of a confluence that it's going to go higher. So they start buy and forgetting that they're buying a very high price. And there's a sudden drop, they stuck in this this area. So hope this example gives you an idea that you got to think what is the consensus means, what is general people are thinking, opposite to that. Then you can take money from them to your trading wallet or trading account. So this is a game where a lot of successful traders like Howard Mark Warren Buffett, Ray Dalio are using on a trading, and which I use, and it gives me enormous of success. And I want you guys to use this, and I'm going to give you a couple of examples, and this is going to give you a more clarity. I'm going to attach another video at the back which can give you a better clarity on this topic. Thank you.